But yeah, so today's gonna be day one, and this whole, so to speak, course, boot camp, mentorship, whatever you want to call it, is gonna teach you how to understand the markets like a pro and be able to trade them like a pro trader would, a profitable trader. And today is gonna be day one. It's just gonna be the introduction to the basics of the market and the basic principles of the stock market, what actually makes the stock market and what moves the stock market, stuff like that. Because a lot of people actually don't know what that is when they get into trading. So yeah, we'll begin here. And before we begin, a lot of people might be like, why should I listen to you? Why should I take advice from you? What do you know, right? So a little bit about me. I've been trading almost for 5 years. In January, it's going to be 5 years. I have gotten almost 7 figures in total prop firm payouts. I have gained over 6 figures in total stock gains / option gains, whatever it may be. I've been on leaderboards for every major prop firm. My funded futures, Top Step, my funded FX, funding pips, funded next. And I have also been a competition winner for a lot of these prop firms when they do host competitions. And I have helped generate multiple students over 6 figures of profits and consistency in payouts. That's a little bit about me and why, what I'm saying is actually somewhat, helpful and not just straight bullshit. Because a lot of people, they try to teach people stuff and in reality, they don't even know what they're doing themselves. But yeah, so we'll begin. What actually is the stock market, right? A lot of people get into the stock market and not actually understand what it even is or like how it functions. But in shorthands, the stock market is basically like a big marketplace. But instead of like, buying and selling, whether it be shoes, clothes, whatever it may be, a flea market, you are instead buying and selling ownership of a company. And that sounds crazy, like, oh, you're owner of a company. But yes, when you buy a stock, you're technically a part owner of a company, whether it's a really small percentage or big percentage, depending on how much stock you own of the company. It does technically make you an owner of the company. And the thing about the stock market is it's not a zero-sum market. What that means is everybody can technically win in the stock market, right? In options trading, futures trading, not everybody can win. When you're trading stuff like that, for every dollar somebody makes, typically somebody loses $1. But when it comes to stocks, stock company valuations go up. So technically, everybody can win when it comes to stocks, because you are actually investing into something that gains value over time. It's not something that expires worthless, and you can actually lose your whole value of something. So when you are buying stocks, it is part ownership inside a company, and it is very important to understand like how stocks actually work when you're trading, because this is technically what controls the market and what we're going to be trading all together. There's different types of trading, and we'll talk about it, give a little brief explanation for all of them. There's long-term trading, which is basically just buying and investing in companies long-term that you believe in, and holding those companies, expecting the company goes up in value. They have some innovation of some sort, or they'll just be worth more in the long run. And then you eventually end up selling your ownership to somebody who now believes in the company later on for a profit. Same thing can happen where, you believe in a company and the company goes bankrupt, or the company loses value, and then you could be in the red and technically lose money on an investment. So that's long-term investing. That's basically just buying and selling and keeping stuff very shorthands and very simple. Oh, and I just realized I'm not sharing my screen. Somebody could have said something a bit earlier, eh? Thank you for texting me, Galaxy. Okay. Here we go. Can you guys see the screen? All right. Well, that's pretty chopped. All right. We'll continue on though. Okay. So day trading. So we have long-term trading, and then we have day trading. Day trading, in simple terms, is just buying and selling whether it be a stock option, a stock swing trade, whatever it may be, usually within a same market period of time. We're going to go over market times and explain what it means, but basically it just means you're buying and selling within a session, whether it's New York session, London session, Asia session. It's just being in a trade in and out, not holding it for multiple days, not too long of hours, things of that nature. Swing trading is like the step above day trading. It's very similar to day trading, but instead of doing it in hours or minutes, you're now doing days to months to weeks, depending on what you're trading. It's just buying and holding a stock for a certain amount of time, predicting that you think the stock will potentially have a run up for a specific reason, whether it's a news catalyst, something you think will happen, things of that nature. That's what swing trading is. It is still very risky, considering that there could be high volatile swings within weeks to month periods if there's heavy news, things of that nature. So swing trading is still pretty risky, day trading being the most riskiest. And then we have crypto. We're not going to talk too much about crypto, but that is another type of trading. It's a cryptocurrency. It's a form of currency that people exchange, and there's many kinds of that, but we're not going to go dive too deep into that, as that's not what we're going to be focusing on. And then we have options trading. So we're not going to teach too much of options, but the strategy we do teach does work for options trading, because options trading is just a type of trading. It's not a strategy. It's a way you trade, a certain stock or a certain equity that you want to trade. But there's certain things like Greeks that go into that. We're not going to talk about options trading too much, as this is going to be more futures oriented. But yeah, so there's also futures trading. So you could trade futures with your own live capital or with proprietary firms, as you can see. And that's going to be the main thing we are going to be trading. It's the best in my opinion for day trading, and requires the least amount of money nowadays to actually start. So that's the main type of trading those are the main type of trading types there is, and the main we're going to focus on is mainly futures / prop firms with a little bit of day trading stocks and equity. And then the main thing we're actually going to be trading is a stock index, right? So we learned what a stock is, but what we're actually going to be mainly trading with futures is stock indexes. So there's 3 major indexes. There's the S&P 500, the Dow Jones, and the NASDAQ 500. The S&P 500 is the top 5 largest 500 companies. So depending how those companies do is how the S&P will react. So a lot of people would be trading the S&P, and the S&P will move differently than NASDAQ or the US 30, and they'll be like, oh, why is this one going up and this one going down? The reason for that actually is because there's different companies in all 3 of them, right? That S&P 500 has the 500 largest company. The US 30 has the 30 biggest blue chip companies, and NASDAQ's actually over 3,000 companies, and majority of the companies are tech companies. So that's why if there's heavy tech swings like in Nvidia or tech related companies, you see a major move on NASDAQ, and NASDAQ typically follows that. But yeah, so these are the 3 main indexes that are in the market. There's also other indexes like the Japan index, the London index, and stuff like that, but we don't really get into those or trade those because that's different markets. But yeah, this is a good way to gauge the overall market. You shouldn't really base everything off these 3, but it's a nice way to basically get an overview of where the market is moving. And this is why you always see like major news sources talking about these 3, and these are like the main 3 that people always invest in and talk about, because they are the most safest, as they are very widely spread and they're very consistent, profitable companies that actually are thriving in this economy. So a lot of people get into trading and they don't even know when they should trade or when the market opens. There's a lot of different sessions. Futures are open 23 hours. It is 3 p.m. to 2 p.m. PST. So it is only closed for 1 hour. It's 2 p.m. through 3 p.m. PST when market is closed for futures. For 23 hours it is open after that. And then we have New York session. New York session is our main session that we trade, and our favorite session. It has the most volume and usually is the time we will be the most active. That begins at 6:30 a.m. and lasts up until 1 p.m. PST. It is, it has its own spikes of, when there will be more volume meaning more buys and sells in the market. 7:30, 8:30, 9:30, 12, 1. At these specific points, we'll learn more about that in the future. These areas are specific for a reason, because there's news, specific things, market closes, stuff like that do happen at specific points in time. And then we have the New York session pre-market, which is 1 a.m. through 6:30 a.m. PST. And then we have the New York after hours market, which is 1 p.m. through 5 p.m. PST. And futures are open for all these New York sessions, so you could trade futures during all of these. And then Asia begins at 4 p.m. PST for futures, and London begins at 12 a.m. PST for futures. So these 2 are very important. Volume does usually pick up for these 2 when you're trading futures, so it is very important to know all these time zones. Because you don't want to be in a trade and not be sized accordingly, and then volume picks up out of nowhere because a major session is opening and you don't know. So these things are stuff you want to memorize and always know, no matter what. You want to know, okay, Asian session is opening, London session is opening, New York session is about to open, things like that. So these things are very important to know, and you always want to keep these in mind. So if you've never heard of these, you could write it down. I'll also share this presentation with you guys, so you guys could take notes after if you don't want to right now. But always keep in mind, session opens and close, very important. You always want to have your positions closed or open beforehand in whatever situation it may be. So when you are trading, there's something called a ticker symbol. So a lot of people get into market and they don't really know what a ticker symbol is. It's pretty simple. It's basically what identifies what you are trading. It's basically like an abbreviation of what you're trading. For example, gold futures, the abbreviation would be GC, and that would be your ticker for gold. For example, for NASDAQ, your abbreviation would be NQ, and that would be your ticker you're trading for futures. Say you're trading stocks and you want to trade NVIDIA. Your ticker symbol would be NVDA, which just stands for NVIDIA. It's just short-term abbreviation. This is what you type, and then your stock will pop up, and you can see everything, and then you could take your trades, whether it be option trades, equity trades, whatever it may be. Or if you're trading futures, you could take your short or long positions. So what actually moves the stock market, right? What causes a stock to go up, down, sideways, whatever it may be? It's actually just as simple as people buying and people selling. I know it's like, no shit, but that's really what it is. And what this creates is something called volume, right? The more people there is buying and selling, the more volume there is. The less people buying and selling, the less volume there is. In most case scenarios, more volume will equal more volatility, and less volume will equal less volatility. More volume is usually good because it's more tradable. There's more liquidity, basically more money in the market for your orders to get filled, and usually it's hard for unpredictable moves to happen. Say it is really low volume, right? And a big sell order comes in. It will cause a huge sell-off because there's a huge sell order coming out of nowhere when there's not much buyers. So that is technically how some people say manipulation happens inside the market, is because people could come in at low volume times and put big orders or big sell orders, big buy orders, whatever it may be. But you always want to be aware of what the volume is. If you're trading in a high volume market and a low volume market, this will basically indicate how the chart's going to be. If there's a lot of volume, there's going to be a lot of movement on the chart. A little bit of volume, there's probably going to be a little bit of movement on the chart. And what this does is this creates something called price action. And price action is very important. This is one of our key principles of our actual trading strategy. We're going to be going over this tomorrow. This is going to be our first kind of dive into our actual trading strategy. It's going to be the basics, basically price action. This is just how price moves, how you can actually see what price is doing, how you can tell if it's bullish or bearish. Bullish meaning price looks like it's going to go up, bearish meaning price is going to go down. We're not going to get too deep into price action today because I don't want to overstimulate people's brains if this is your first time hearing this, but just keep that word in mind for now. Price action, that's going to be a very key thing when it comes to trading. So news is very important. A lot of people get into the stock market / trading and they don't even know what news is very important. This will literally make or break you if you understand news. If you don't understand news or never look for news, it will be very hard to succeed, as there will be major volume spikes out of nowhere and you won't see them coming. It will always affect the market no matter what it may be. You might think it's small, but in reality it could be big. So there's helpful tools you can check, such as Forex Factory. It tells you basically all the financial news. It'll tell you if there's yellow, orange, or red folder news. Yellow meaning the small news, not too major. Orange meaning medium news, it's kind of important, not too important. And red folders meaning very important. This is going to affect the market by a lot more than likely. And there's things like FOMC, which is usually when Powell speaks, or there's FOMC reports, stuff of that nature. When there's CPI, Consumer Price Index. When there's earnings for stocks, basically companies reporting how much they made or lost for the quarter. And then price producer index, basically how much people are spending to make products and stuff like that, and how much people are spending on products. It is very important to know when things like this are happening. You can always just pop up Forex Factory and it will tell you the time it is happening. Usually it's at 5:30 a.m. PST or 7 a.m. PST. It will always tell you, and it'll always tell you the forecasts and the prediction. And the previous one. So it'll tell you what's predicted for when the news comes out, and if the prediction is lower or higher than expected, that is very important to note, because that could indicate what the market will do for the rest of the day. So very important to keep track of news. There will always be news every week, so always keep track of that. There's also other news that isn't actually finance related, such as war talks, if Trump is speaking to other political leaders, stuff of that nature. That you kind of have to be more informed on news sources and stuff like that, whether it's Twitter, Instagram, whatever it may be. But it's very important to just kind of be informed with what's actually going on in the real world when you are trading markets, because you are trading global markets. Other countries trade the U.S. market, so everything that happens in the world technically will affect the market. So it's very important to keep in mind what's going around in the whole world while you're trading. Types of orders. So when you're trading, there's multiple types of orders, and you have to pick one of these order types no matter what you're trading, whether it's options, futures, stocks, equity, whatever it may be. You could do a market order, which basically instantly makes your order fill. which could be risky because if there's high volume in the market and you do a market order, you don't necessarily know where you will be filled. It could fill you at a random spot just in between where the price is, and say there's a huge jump in price while you click market order, it will fill you for a possible higher price than you intended. But this is typically used when the market is high volume and you can't like get a limit order to fill because price is moving too quick ahead. Like say you want to enter somewhere but price is moving too quick, you'll never get filled, but you want to just instantly get in the trade, then you would market fill. Say you see a potential area for where you think buyers or sellers will step in, that's when you could set a limit order. That's a preset order that will basically fill once price hits that area. So say you think, for example, at $100 people will sell, so you set a sell order at $100 and then it fills there. Once it hits that price, it will fill, and that means your order is successfully completed and now you are in that trade. And when you are in that trade, that's called your position. So you'll hear us use these words a lot. Filled means that your order was complete, and position is basically the current trade you are in. Some other terminology that you guys are going to be needing to know is something called a stop loss. A stop loss is a predetermined order to close your position for a loss. It's basically like before you enter a trade, you have decided where, okay, at this point, I will close this trade for a loss, and it will automatically close the trade for you. It is very important to trade with stop losses, especially in high volatile markets. We'll talk about this more when we have our risk management session. And then we also have take profits. Take profits is basically the opposite of a stop loss. It's a predetermined order to close your position for a gain, and you would set this ahead of time once you enter your order. And then once price does hit that area, if it does, then your take profit would hit, and then your position would close, and then you would no longer be in that trade, and then you would move on to your next trade. So these are going to be the key things you guys need to actually trade, right? So these are the things you need. If you don't have these, then you're not going to be able to trade. So number one, you're going to need a brokerage or a prop firm. Whichever one you want, either one works. For brokerages, I would recommend Webull or Robinhood. You could trade futures, you could trade options, you could trade equity on those. And then if you plan to trade futures and don't want to risk too much, then I would recommend a prop firm. Prop firms are technically for a little bit more experienced traders, as they do require some skill to actually make money off, but they are very helpful in the sense that you don't have to risk a lot to make a lot. So prop firms are a very nice way to leverage your money once you're actually somewhat of a successful trader. So very helpful thing that you can take advantage of. And then to actually view the charts and see what you're trading, we're going to use a software called TradingView, and that's where we're actually going to view the charts that we're trading, and that's where we're actually going to like chart and see what trades we're going to take. And they do have a premium version. I personally use the premium version. I would recommend it. It's only like $14 a month, and I think it is definitely a necessity. It's short-term thing that you're going to pay, but it will pay off long-term. And then we'll probably go over how to use TradingView tomorrow as well. Another thing on that. But yeah, so these are the things you will need to actually trade and see the charts. So what is futures trading? You guys keep hearing me say what is futures trading, but what actually is it? It's a form of leverage trading, and leverage trading is very risky, but it is a way to basically get more of an asset with a small deposit. Basically, say I put $100 up front, I could get $1,000 or something, but once I lose the $100, I no longer have ownership of that, and that's called your margin. And say you lose $100 before you take a profit, you would get margin called or liquidated depending on what you are trading. So it is very important to kind of understand this, and this is where risk management will come in handy. But it is a nice way to leverage your money if done properly. If used improperly, it can end very badly though. So that's why prop firms are very helpful. The thing about futures trading is it is a no sum, no gain market. We talked about that earlier. For every dollar you make, technically speaking, somebody else is losing $1 because you are not buying an asset. You are buying contracts trading against other people, technically speaking. It's almost like a PvP against other people trading NASDAQ contracts or S&P contracts, whatever you're trading, or gold contracts, whichever one it may be. I would mainly recommend using prop firms if you are going to be trading futures. If you are trading options, I would recommend using Webull and Robinhood, and for equity, any good broker. So, is day trading gambling? A lot of people ask that, and in shorthands, it is if you don't know what you're doing. But we do know what we're doing, or at least we are going to learn what we need to know to do. Okay, and how are we going to do this? We're going to use previous data from the charts, statistics, technical analysis, things such as price action, charts, patterns, and risk management. One thing about this though is past results do not guarantee future results. And let me explain. Then you might be like, oh, then your strategy might not work in the future. That's not what I mean by that. What I mean by that is if you see something happen yesterday in the market, say price rejects at a certain point in the market yesterday, that does not mean that's going to happen today, right? You cannot base a trade off what happened yesterday or what happened the day before. You can look at the data and look at the statistics behind it, but you cannot do exactly what happened the previous day and expect for it to happen the next day. All right. A lot of people get in the habit of thinking because something happened previously, it's going to happen again, and it's bound to happen, but that's just not the truth. And that's why you have to, the next thing under that, adapt. You have to know the market conditions, and you have to understand what you're actually trading when it comes to trading. And you guys, a lot of these words kind of might not make a lot of sense. But once we actually start to explain the strategy and we go over what price action is, how we chart, the patterns we trade, and everything inside of that, you guys will kind of start to understand. Everything will kind of click. But yeah, that's the basics of that. And this is what we actually use in our trading strategy, right? These are the key things that we're going to be learning, not today, but in the next couple of days, in the next weeks, right? We're probably going to spend a whole day on each one of these single things, as there's a lot to dive in each of these topics. So the first thing we use for our trading strategy is price action. We've mentioned that a lot, and we'll go over that in depth tomorrow. Another thing we use for our strategy is supply and demand. You might have heard that. It's just a common term in the business/finance world. So that's another thing we use inside our strategy. Another thing we use inside our strategy is called the RSI, which stands for the Relative Strength Index. We'll have another whole class just based on that as well. Another thing we use inside the strategy is called the Bollinger Bands. We'll have another whole class dedicated on this as well in the upcoming weeks. Another thing we use inside the strategy is called RSI levels. We'll have another class specifically explaining that as well. Another thing in the strategy, RSI divergences. Again, we'll have a specific class just based on that. Breakouts/breakdowns, that kind of falls into price action. I'm probably going to make a whole separate class for this as well, because it is technically price action, but I want to teach exactly how to trade breakouts and breakdowns, because this is a key way we do actually take trades with the strategy, and you got to be able to identify these. Another thing we do trade is pre-market highs and pre-market lows. That kind of also falls under price action, but it is very important to know how to actually trade it, right? It's one thing saying something, and it's one thing knowing how to use something. So we also are going to probably have a whole section on how to actually use your pre-market highs, pre-market lows. And then our last thing that we actually use inside the strategy is our two indicators, trauma and VWAP. Those are basically the same. They're not necessarily used in Confluence, but they have their own thing. We'll make a whole video explaining how to use those two and what they actually mean. But those are the only two indicators we use on the RSI and Bollinger Band. So all these things together, you use it together, all in Confluence, and this is what creates our trading strategy. As you guys can see, we have a lot of things that go into the strategy, and that's what actually helps us have somewhat of an edge in the strategy and actually make us consistently profitable inside the market. So together, going forward this week, we're going to go over all these things and basically learn these one by one. And then after we go over the basics, we're going to slowly start transitioning into real-time markets, and you guys are going to start taking your own trades in real time. And then once market close, we'll go over your guys' trades, see where you guys entered, exits, what you guys saw, your thought process behind the trade you took, if the trade you took was even valid, if it wasn't valid, what you could have done better, etc. But this is the basics of today. It was just a short, brief introduction, kind of give you a basic breakdown of what's going to be going on in the next 2 weeks of learning the strategy and then actually testing the strategy. It's going to be a long process. Today's November 9th. This is probably going to take minimum a month for you guys to fully understand somewhat of the strategy. If you guys have any questions going into next week on how we're going to be doing any of this or anything of that nature, feel free to ask now. Yeah. No one? Crickets?
I got a question, actually.
Yes, Mr. Sean, let me hear it.
So basically, you said it's going to be like 2 weeks, like the whole course?
Oh no, that's just gonna be like the introduction to the strategy. That's like probably gonna just give us like I said, we're gonna probably spend a whole day on each one of those topics, whether it's like an hour, 2 hours, sometimes even three,
Okay.
just on that one topic. We are also going to be
Perfect.
trading in real time still with the normal Discord at 6:30 a.m. So you could tune in and try to catch some knowledge from those calls as well. But we are
Uh-huh.
basically going to be going over all the basics like one at a time. We don't want to do everything at once because then we'll kind of be all over the place. Actually, we might tomorrow just go over the basic strategy as a whole to give everybody a basic breakdown and then do price action on Tuesday so everybody could have a basic understanding so they can see what to look for when they're looking at the markets. Probably do that so it could help you guys actually understand like what all the stuff I mentioned actually is going into tomorrow and Tuesday and the rest of the week. So when you guys join VC, you guys aren't lost and are like, what the hell are they talking about? Like, what are the Bollinger Bands? Like, what are they looking for? Things of that nature.
Oh.
But everything will be posted in the Discord and in the group chat messages. All the calls will be posted, and all the calls will also be recorded in case you can't attend them. I would highly recommend attending them in live time. This one, there wasn't really people talking, but usually when we do these, people are talking and asking questions. This was more so just me yapping like it's a fucking finance class. But typically people ask questions when they have questions while I'm kind of explaining stuff. But yeah, now is the time to ask any questions. If you guys do have questions about any of the stuff we talked about today. I know it wasn't like much, it wasn't too extravagant information. It was basically basic information. Like you could damn near find this on, any online source. Like this is bare minimum basics. Like this is top of the surface.
Got another question actually.
Mm-hmm.
So when a market opens, is there like you were talking about the news, right? About like the folders and stuff.
Yeah.
Is that typically like around like when market is about to close, like around like 12?
It's always different. You could check it ahead of time. So say say right now it's 8:18 p.m. right? If you want to check if there's any news for tomorrow, you could pop open your Safari tab, right?
Oh.
And then just open up Forex Factory and then go to Monday. So Monday, this is all the news we have for Monday. So we don't have any red folder news for US news. We do have some for GBP, I mean, the Great British Pound. But this really won't do much unless you're trading the currency for Forex on this. So none of this news should really affect us, like in the NASDAQ market. But now we want to be aware of actual news around, like, the world. Say if Trump is doing anything, or say, if there's a war breaking out somewhere, stuff like that. Just always be on your toes and stay informed on what's going on in the world.
Perfect.
I have a question.
Yes, Mr. Zane.
Are these classes going to be daily or just?
Yes,
like,
they're going to be
you
daily,
let us know?
like every single
Okay.
day. The only reason there won't be a class is like if I have something really, really important come up. But for the next 2 weeks, it will be every day after market close, approximately 3 p.m. I will text beforehand to let everybody know, but it will be every day. And I know some people might not be able to make it every day, and that's why it will be recorded. But I highly recommend trying your best to make it. And I mean, at the end of the day, you are paying for this, so you want to get your money worth. So if you don't show up, that's on you. But I mean, I don't see why you wouldn't if you're paying. It's like waste burning money. But I'm here to help you guys and teach you. So ask away any questions you may have. Even if you think it's a stupid question, more than likely somebody else probably has the same question. Nope. Nobody has any questions.
Yes, Chris, I do.
Let me hear it, Mr. Yonal.
So just to confirm, bro, when's like the next? So what's the days you're gonna do for like the next meeting?
Well, I'll be posted. I'll make a little schedule and post it inside the group chat so everybody can be informed and kind of plan ahead of time. I kind of didn't do that the first time I hosted the first one. It was kind of random, and it would kind of suck for some people because about what the hell, that came out of nowhere, and that was kind of on me.
Yeah.
That was bad planning. But this time I'll have it more organized and have a schedule set and planned so everybody could plan ahead and know what to do.
There we go. Perfect, man. All right, then, Mr. Chris.
All right, somebody texted me a question. When should you buy an account if I've never bought an account? So I don't see a reason to buy an account up until maybe like a week or two in. The reason being is if you don't know what you're doing, you're more than likely going to lose money or blow your account. So I would say to at least learn the basics before you try anything. And even when you do start trying it, you are basically a brand new fish. You do not expect to make money right away. size the smallest possible. So if you're trading prop firms or options, one contract or 0.001 for your futures, literally the smallest thing, just to get a feel for the market, not necessarily to make money. Trading is a long-term thing. It's not short-term. If you look at it short-term, you will get short-term results that will not be good. But yeah, any more questions from anybody? After this, by the way, guys, we're gonna have a charting session. That is technically with the old group. All the new members are welcome to show up. A lot of the stuff we talk about, you might not understand it, but you could get a little look into how we chart and stuff of that nature going forward into next week. Usually our charting sessions are always on Sundays, right before market does open or after market did open for futures. All right, if nobody has any more questions, then we can begin our charting sesh for today.